Hello, ladies and gentlemen. Welcome back to Reserved Investments. And this is part 14 of my 18,000 subscriber Q&A series. Now, I want to warn you, this is not going to be the end of the 18,000 subscriber Q&A series. We're probably going to need at least one more video to finally put the final nail in the coffin due to all the questions I got asked. That said, I do want to thank all of you for your patience with this. We've already surpassed 19,000 subscribers. And I'm still answering questions as part of the 18,000 subscriber Q&A. So let's dive right in. The first question here is actually a really good question. It's on European antiques. So the first question is, first of all, Sean, thank you. I learned a lot from your channel. Here are a few questions, and I'm going to take these in order, of course. Which European antiques below $500 are in demand by Americans? Now, this person tells me right from the get-go, he is from the Netherlands. Now, what makes this question very difficult to answer is the fact that he put a qualifier of the fact that these items have to be valued below $500. If we would remove that qualifier, this would actually be a very easy question to answer. But I'm going to do my best to give it the justice that it deserves. So when we look at European antiques, there are certain items, certain antiques, certain artifacts that sell for a premium in the US simply because they're scarce for collectors in the US to get their hands on, because typically these items are readily available overseas. Let me give you one such example. If you have a lot of knowledge in antique maps, authenticating original antique maps, knowing the difference between a reproduction and a fantasy piece, you can make a lot of money in this market. Case in point, there was an excellent episode of Pawn Stars that aired many, many years ago. It was when Rick, the owner of the shop, goes over to Great Britain and he ends up going to an antique map store and he ends up spending several thousands of dollars. Of course, it was in pounds because he was in Great Britain, but he spent a significant amount of money on maps that he was going to bring back to the US and sell in his shop. Map collecting is a niche market, but it is a mature and sophisticated market at best, especially when you're going after the true, authentic, historical, significant pieces that are original. So that is one market I would recommend to you. Now, whether or not you're going to be able to do it on below $500 a piece, that's anyone's guess, but you are better equipped to find pieces like that are selling for a discount or a bargain overseas than you would in the United States. Always remember, when we look at the antiques market, when we look solely at the micro level in the United States only has roughly 250 years of history. So by nature, if you live overseas in pretty much any other developed nation other than the United States, if you're in the antiques market, you have an advantage. Because if we look at Europe by and large, Europe or even China or even Japan, you guys can go back thousands of years. So you have a lot of history, you have a lot more artifacts to be able to find and source as a result of that significant difference in the length of history of your country. So that's what makes this so fascinating. Another market I would tell you to look at would be the market for edged weapons. There are a lot of edged weapons that come from overseas that have a significant collector value in the US market if they are imported. Now, again, you have to buy right. You really have to be an expert in these fields. You really have to start off learning these markets, and you are going to get an education because the barrier to entry, unlike collectibles, for these type of items, antiques, it's higher than that of collectibles. So you really have to be willing to put in the work. You have to do a lot of market research, and you really have to get your hands dirty. You're probably going to make some mistakes early on. You're probably even going to make some mistakes if you are successful at this. Now, I'll name a couple of more markets for you here. Another market where you could make significant money due to the arbitrage between the overseas antique market and the US antique market would be like the market for antique furniture. The problem is, obviously, the cost to send those type of items overseas. The shipping is going to be insane because most pieces in the field of antique furniture is going to be very heavy, and as a result, it's going to be very expensive to ship. But that is one market also where there is opportunity for arbitrage if you're buying properly overseas and you are shipping it to the US to sell. Another market, I'll give you one more here really quick. Market for certain types of art glass. Obviously, you're not in Italy, but Italian art glass sells very well in the United States. And there is a market for that where there are literally art glass collectors that go overseas in Europe. They source stuff, they come back to the US and they sell it for a premium. So there's 4 markets I just named where you would have opportunity from arbitrage, assuming you know what you're doing, assuming you have the means and the ability to buy these pieces and then send them into the US marketplace. Now, here's the bad news. It's not as easy as it seems. You really have to be on the up and up. There's very few antique dealers that have a worldwide presence that can do that on a regular basis and continuously turn a profit. We're talking superstars in the trade that can do that realistically, that can go out and source materials. This is why if you want another tip, if you start to build a following, a business, and you become a high-end antique dealer, are you aware most high-end antique dealers, they usually carry just a few items that sell for either tens of thousands of dollars or all the way up through hundreds of thousands of dollars a piece. And the reason why they carry only a few items is because their profit margins on a lot of those items are substantial, number one. And number two, they tend to go after historically significant investment grade antiques, meaning items that are pretty much, I don't want to use the G word, I don't want to say guarantee, but most of the items that they're going after are pretty much guaranteed to increase in value on the secondary market. As such, top tier collectors and investors are willing to pay a premium for those items just to own them. So that's how that market works. Now you have another question here, a couple more actually. How could museums benefit from collectible investing? Well, here's the rub. Early on when I started this channel, one of the first videos that I put out, it was like within the first 100 videos that I did. That's what I mean, my early vintage videos. That's what I'm referring to when I say that. One of the videos that I talked about is how collectors should not open museums. Believe it or not, museums benefit from donations. They also benefit from charging an admission fee when people visit the museum. So yes, there is a way, I may talk about this in another video, where museums can benefit from collectible investing. Most, however, were usually either started by one of two ways. It was either an extremely wealthy benefactor who had, we are talking hundreds of millions of dollars, billions of dollars, where they set up a trust. The trust still exists after that person passes on, and they have instructions in that trust along with a hefty bank account to carry on the wishes of the benefactor to open up a museum to showcase those pieces. A prime example of this, if you live in the Philadelphia area like I do, you ever hear of the Barnes Foundation? The Barnes Foundation is a massive collection of almost priceless pieces of high-end art that were all collected and put together by one man. And the person who started that literally put all those pieces in a trust, and he had so much money that he pretty much set up an endowment where they opened up the Barnes Foundation just to display those artifacts. So that is one way you can go about setting up a museum. Again, though, it's not recommended because you would need to have hundreds of millions of dollars, if not billions of dollars on tap. And there's still a chance that the museum could be run poorly. There's still a chance the museum could go bankrupt. It all depends. The second way that museums succeed is usually they're run by the government. Like in the United States, the Philadelphia Museum of Fine Art, that's run by the government. The Smithsonian, that's run by the government. So the government has a vested interest in a lot of these artifacts, and because they're the government, they can obviously control the cost, utilize taxpayer funds if they need to keep a lot of these great places that we all love to visit. If you are into museums, if you're into art, antiques, collectibles, they're great places to visit, and the government funds them through taxpayer dollars. So that's the other way that a museum can work. If you happen to be the government, you want to open up a museum, it's going to work most likely in your benefit because you have the means to do it, you have the means to carry it out. But really, when you're asking me about collectible investing, the government itself, when a government runs a museum like the Philadelphia Museum of Fine Art or even the Smithsonian, they're really not trying to invest in the collectibles themselves. There really is no vested interest for that. But in an upcoming video, I may talk about that because one of the things that is opening up, I don't know if I want to go in this direction in this video, like with fine art, this kind of gets into like a gray area, but there are a lot of major corporations, like multi-billion-dollar companies out there that do hold art as an alternate asset slash investment. So it is kind of changing the way this game is played, because now we have like Fortune 500 companies that are also investing in art at present time. And it's quite fascinating. And I have a video planned for this. I don't know if I want to put it out, because usually the videos that I talk about fine art in this channel don't really do that well. But if I get around to it, I will record the video, because it's going to take me several hours to set it up. But I actually do research on this, and it's very fascinating when we look at certain Fortune 500 companies. Believe it or not, they do have a wide range of fine art in their portfolios. Now, it's not every single Fortune 500 company, but there are companies out there that actually do have as an alternate investment, they are invested in art. And this kind of ties into collectible investing, because that's one of the reasons why they're buying it. So it kind of gets interesting. You have another couple of questions here that I want to answer for you. Sean, you said that coins and currency, that market is booming. What is your opinion on the Dutch coin and currency market? Remember, this person's from the Netherlands. Well, there is strength in the Dutch coin and currency market. The problem is it's not one of the hottest worldwide markets for coins and currency in existence. Right now, one of the hottest markets, and I'm going to sound biased here, obviously the US coin and currency market is on fire right now. The market for ancient coins, since NGC Ancients came along and started grading those pieces, is on fire at present time. We are seeing a lot of record-breaking sales with certain Chinese coins, even Japanese coins a little bit, French coins, obviously coins from Great Britain. So there are other areas where the coin market is heating up, because now a lot of your third-party grading companies, they are global in scope, meaning NGC, PCGS, they're starting to grade coins in other locations, other countries. So that's adding to the allure. So there is a lot of opportunity in this market. Just keep in mind, there are a significant amount of collectors in the Netherlands that do collect coins and currency from your country. The problem is it's just not one of the top 5 markets that I would list worldwide for coins and currency at present time. It doesn't mean there's not opportunity there. Now, you ask another question here. Which categories do you find right now are the most interesting? Okay, I'm going to name this, and this is going to probably surprise some of you. Right now, I'm very fascinated to see what is going to happen with vintage video games. Now that the, how do I want to say this, the controversy with Wada Games has pretty much died down. I'm taking a really hard look at the market, and I want to see what's going to happen over the next coming months, over the next coming years. Are collectors going to return to that market? Are high-profile investors going to come back into that market? I don't think prices will ever get to where they were during the pandemic, but it is going to be an interesting, fascinating market to watch. And this is a market also that I have a vested interest in. I will state that. I've often said this. Video games have organic collectability. The problem that we had in that market, you guys know the story, I've done tons of videos on this by now, was how that market got hot, how it overheated, and how it eventually pretty much crashed and burned. That's the problem that I have with that market. But it's still very fascinating to me, and I do think that there is opportunity in that market. Another market you already brought up, I am tremendously fascinated with, of course, the US coin and currency market. That's where I choose to invest a lot of my hard-earned dollars. So that is always an interesting market for me at any given time, because there's always significant amounts of capital moving through that market. Another market that I am watching very closely right now is, of course, the vintage comic book marketplace. You know, I was going to do a video on this. I ran out of time. Heritage Auctions just had a signature comic book sale, and it was interesting to see the dual polarity of the market, where there were certain pieces that sold for record-breaking sums, but then there were other pieces where you thought that they were going to sell for a significant amount, and they sold for, I hate to say this, peanuts compared to their previous high prices. So it's very fascinating for me to watch a market that is in such transition. I'll give you one more market that I'm very fascinated in right now, and this is going to probably bore some of you. The market for antique furniture. Believe it or not, the market for antique furniture has been going through ups and downs for many decades now. And I'm just fascinated by the amount of money that flows through that market, and it's pretty much behind the scenes. Because obviously, if I would start a YouTube channel where all I did was talk about the market for antique furniture, I probably would get like 10 or 12 subscribers at best. But that is a very fascinating market because, believe it or not, it is one of the staples of the antiques and collectibles trade. And again, much like coins and currency, you can learn a lot about how markets in the overall antiques and collectibles trade operate just by watching certain mature and sophisticated markets in the trade unfold. For instance, if you want to pay attention to the fine art market, a lot of people don't like the fine art market because a lot of people look at it as a pie-in-the-sky market where the average person really doesn't have millions of dollars to spend on a piece of art. But that market tends to go through predictable cycles. And just analyzing that market and seeing how it operates in relation to movements in the overall economy by and large can really help you look for patterns and trends in the overall antiques and collectibles trade. And that's what's very fascinating to me. I'm very fascinated with markets where they have a lot of movement. There's a lot of volatility and there's a lot of money moving through a lot of these markets. And that's what I'm fascinated with the most. It's really fascinating to me how wealthy people invest in the antiques and collectibles trade versus the Timmies, Kimmies, and Poindexters. And that's what I try to do on this channel. I try to show you guys how these markets work behind the scenes, because once you learn that, you can apply this knowledge not just to antiques, not just to art, not just to antiquities, but also collectibles. And you can actually become a better collector, and you can learn to avoid what I call the Timmy traps, the speculator traps out there. That's how I was able to sidestep the video game bubble. That's how I avoided Marvel trading cards. That's why I don't touch flesh and blood. There's certain collecting markets that I tend to avoid because I have knowledge. Does that mean I'm always right? No, it means that I'm right a lot more often than I'm wrong. And that's why I'm able to invest in these markets and become successful. Always remember, every economist thinks that they're a genius, but intelligent economists know that they're going to be wrong a small minority of the time. If they're right more than they're wrong, though, they're going to be a very good economist. So that's what you have to learn when you navigate these markets, okay? I've spent 18 minutes on your questions. I hope I answered them in full. We're going to someone else's question now. Sean, congrats on 18,000 subscribers. Has Bitcoin's recent $100,000 achievement or the new administration's friendly attitude towards it changed your views on it at all? If not, what would it take? At some point, wouldn't it be a risk to keep staying on the sidelines? Okay, if you guys watch this channel any length of time, you know that I am not a fan of cryptocurrencies. I am not a fan of Bitcoin. I am also not a fan of meme stocks. I'm not a fan of gold, silver, bullion investing, silver, gold stacking, whatever you guys call it. I consider those investments, in all honesty, this is going to upset some of you, Timmy investments. Now, that said, if you're somebody out there where you look at these markets responsibly and you say, you know what, Sean, I think you're wrong. I have 3% of my portfolio invested in Bitcoin. I have another 3% invested in silver. I have another 3% in gold. Well, that's 9% total of your entire investment portfolio split up between those three commodities. That's okay. I have nothing against you. My problem is the people that tend to go after all of this stupid stuff, gold, silver, cryptocurrency, Bitcoin, instead of diversifying into it, they go all in. They're no different than the Timmies, Kimmies, and Poindexters that are putting all their money in vintage or graded video games or Pokemon cards or Magic the Gathering or Lego sets or whatever it is. In a market like Bitcoin, for how volatile it is, the fact that it has no underlying cash flows, what you should be doing is you diversify into that market. You don't go all in. Case in point, I brought this up multiple times on this channel. I have 20 to 30% of my net worth invested in antiques and collectibles. That portion of my portfolio is 100% speculative. It doesn't matter if I'm invested, the majority of that's in rare coins, comic books, vintage toy, whatever it is. That is completely speculative, volatile, and it's not paying me any type of dividend or interest payment. There's no underlying cash flows. So if I now start to invest in Bitcoin or cryptocurrency or gold or silver, I'm now investing in even more assets that are speculative with no underlying cash flows. So what that's going to do, if I keep doing that, I'm going to have massive volatility attached to my portfolio and no underlying cash flows to show for it. So you guys understand? That's why you can make an argument Bitcoin isn't going to go away anytime soon. I don't think you're crazy if you're diversifying into Bitcoin, for that matter. Or I think you're crazy if you're going all in to the point where you're blocking out every other investment opportunity. I've said this before. Young people in particular, you guys need to get financially established. You should be building a portfolio of index-based mutual funds and ETFs that have underlying cash flows. So for instance, I'll name 3 that you can start with. S&P 500 Index Fund, Total Stock Market Index Fund, Total World Stock Market Index Fund. There's 3 that you can start with, and you can set up a portfolio, and you can start putting yourself towards the path of financial establishment. That's where you need to be before you go all in on gold, silver, collectibles, meme stocks, cryptocurrency. Now, another point I want to make here is if I would ever choose to invest in Bitcoin, I would not take possession of the Bitcoin directly. I would use an ETF. That's why I always laugh at the people that come into my comment section telling me how great of an investment gold is or silver is. And then, like, if I interact with them, or sometimes they just say outright, oh, I take possession of all my precious metals. You understand, you can invest in gold and silver through an ETF, an exchange trade fund. That's how I would invest in precious metals if I was going to. And I always laugh. There's always a conspiracy theorist that then comes into the comments and says, well, Sean, you don't take full possession of that particular precious metal. It can go to zero. How do you know they're actually backing it with real gold or silver? I'm here to tell you guys, the chances of a complete economic collapse, I mean, I don't care your political views. I don't care what kind of conspiracy theorist you are. Most likely, we're never going to experience that type of economic collapse where everything goes to zero. It's most likely not going to happen. The closest we ever came to that in American history, really you can argue there was 2 times. The Great Depression, just making this simple, and the 2008-2009 financial crisis. And what happened during the 2008-2009 financial crisis? I can tell you firsthand because I was there. I was laughing at everybody who was cashing in like index funds. They were selling all the hardcore financial assets, and I kept telling them, you realize, I don't care if it's a Democrat or a Republican in charge. They're just going to come in, they're going to bail out the banks, they're going to screw over all the working people, and pretty much the billionaire class is going to clean up by buying all these undervalued assets. And that's pretty much where I got my money. I was right there buying up all the brokerage assets I could get because I saw the writing on the wall. Other people who were extremely much more wealthier than I was coming in doing the same thing. And I don't think that people understand how much wealth was created by the people who stayed the course, who buckled down and had the ability to invest more when the market pretty much collapsed 50% back in 2008, 2009. There was so much money to be made coming out of that recovery. I remember getting into screaming matches with people, like just telling people, you are so damn thick. Don't you understand? It doesn't matter who we elect as the next president. They're all going to give pretty much the bailouts to the major corporations that screwed us, and the process is going to start again. That's pretty much the going norm. It doesn't matter if Trump's president, doesn't matter if Obama's president, doesn't matter most likely even if Bernie Sanders, who I love, is president. That's pretty much the name of the game at this point. I hate to tell you guys. So when I look at these markets, I look at the volatility. I look at these markets from the perspective of risk versus reward. And in my opinion, Bitcoin, cryptocurrency, gold, silver, those particular investments, materials, whatever we're calling them, commodities, there's too much risk for the potential reward I could gain out of them. Now, that's based on what I'm comfortable with and how my overall investment portfolio is currently structured. And unfortunately, there's a lot of Timmys, Kimmies, and Poindexters out there that really want to get into a debate with me back and forth over this nonsense. And I just don't understand why. You are aware. You are welcome to go and start your own YouTube channel. You can talk about Bitcoin. You could talk about cryptocurrency. You could talk about putting all your money in Pokemon cards. You could talk about investing in gold and silver, and I will not bother you. But I don't get why, when I have a presence on the internet and I tell people that, hey, you should work on getting yourself financially established, you should invest in assets like an S&P 500 index fund that have underlying cash flows, I have Timmys coming into the comment section telling me it's bad advice. I'll tell you what you do. Let's prove this once and for all. I started this channel 5 years ago in 2019, towards the end of 2019. Go look at what the S&P 500 index was back then when I told you that from day one, and look at it is now. And you're going to see it would have been just easy money for you guys. All you had to do was just invest and keep it there. Over the long term, the market always works out in your favor if you are a passive investor of index funds. I've been saying this for decades now, and I am living proof of it. And it's amazing how many people cannot figure this basic economic truth, financial truth out. And another thing I do want to talk about when it comes to cryptocurrency, you know, guys, one of the things too, when we look at this is I was probably taught capitalism different than some of you guys, only because I'm a Gen Xer. I was born in 1976. So the way that I was taught capitalism is pretty much controlled by major corporations. It's controlled by businesses and companies. And what that means is if you're going to try to make money in a capitalistic system, and I'm not here to split hairs. I understand that some of you are probably watching this video in Great Britain. Some of you are probably watching this video right now in Sweden or Switzerland, and we all know that you guys embraced democratic socialism over there. But let's be realistic. It's all pretty much a capitalistic market at the end of the day. If you want to make money, if you really want to build wealth in a capitalistic society, there's two ways to do it. Either you start your own business, you grow that business, and you have investors that invest in that business, and you go to take it public, and you crown yourself CEO, and you end up becoming extremely wealthy as a result of the growth of that business. That's one way. The second way is you take the money that you either earn, or maybe you run a small business. Like I consider Reserved Investments a small business. So let's say that I take those profits and I invest it in other businesses. That's what I'm doing when I'm investing in an S&P 500 index fund. So that's how I was taught capitalism. I was actually taught capitalism by playing a game of Monopoly. Could you imagine if you played a game of Monopoly and you went around the board and you didn't buy any property? It wouldn't be a very successful game. So that's why my mindset, I don't want to say is better, because it's not. There's different ways to skin a cat. I hate to use that analogy because it is a pretty sick analogy, but it's the truth out there. There's different ways to go about achieving success. But one of the reasons that I've been successful is because I've always stuck to my core truths. The thing that I was taught about finance, capitalism, money, economics, and business. And that's what benefited me over the long term. And when I look back on my life, there were certain instances, like I remember before I turned 21, I was a mess. I made a lot of bad business decisions. I made a lot of bad moves on the proverbial chessboard of life. And I paid the ultimate price for it. I nearly went bankrupt. I had a lot of problems early on. And finally, I realized that a lot of the people that took the time to educate me, not only in the antiques and collectibles trade, but also in business, economics, and finance, they pretty much took the simple path to wealth, which is you diversify in markets that are extremely speculative. You build a position in markets that have underlying cash flows and are proven. And that's pretty much the advice that I took. And here I am. I'm not even 50 yet, and I'm sitting pretty comfortable. That's all I'm going to say. Okay, so I have to look at the path that I took, and I realized that I made a lot of good decisions to get here. So what I'm saying is cryptocurrency, Bitcoin, silver stacking, gold stacking, it's not for me. That's where I'm going with this. It's not for me based on how my portfolio is currently set up. I hope that makes sense. Next question. Sean, do you think the interest in newsstand comics over direct comics has long-term investability? The answer is yes, simply because the market has already decided that this is a thing. So this is kind of where we are at now in this market dynamic, where the vintage comic community is valuing these type of comics, these editions as such. So that enough is going to give it legs. So I hate to say this, those of you that think that this is just a passing fad or this is eventually going to dissipate, it's most likely not. It's here to stay because we're already seeing record-breaking prices for a lot of these items just because it's a different type of edition. Do I think it's ridiculous? 100% I do. But again, it goes back to the argument about Incredible Hulk 180 versus 181. There's a lot of people in the comic community that say, well, wait a minute, why is Incredible Hulk 181 selling for a significant premium over Incredible Hulk 180? Incredible Hulk 180 is technically the first appearance of Wolverine. It's just Incredible Hulk 181 is the first full appearance of Wolverine. As such, don't get me wrong, Incredible Hulk 180 is a very valuable comic book. It's well worth collecting. But the investment grade key of the Bronze Age era is, unfortunately, Incredible Hulk 181, because that's what the market has agreed is the valuable first appearance of the Wolverine. So you can kind of see the similarity there in the analogy that I just gave. But I will tell you, interest in newsstand comics isn't going to go away simply because the market has already made up its mind. So once we see this pretty much take on as a trend, it becomes a thing, and it's not going to let up. It's not going to let up until a significant change happens in the overall vintage comic book marketplace. And more than likely, that would probably come when the market starts to dissipate several decades out due to a lack of demand. But up until that point, I'm here to tell you, I'm sorry, newsstand comics are going to be the bona fide investment when compared to direct comics going forward. That's the best way I can answer that. And again, it doesn't matter if I agree with it or not. Obviously, I just told you I do not, but the market's going to do what the market's going to do. The market doesn't care what Sean or anybody out there thinks otherwise. It's just the way this works. Next question. Sean, congrats on 18,000 subscribers. When it comes to collectible card games, what do you think of promo cards? Mostly for Pokemon, but any thoughts on other games as well? Okay, let me answer this part of your question first. I think promo cards are a niche market, but there's a lot of collectability there. As a matter of fact, you hit the nail right on the head when you stated Pokemon. Pokemon, these particular items, the promo cards for Pokemon, can be considered pretty much investment grade pieces. Now, it depends, of course, what era. It also depends on the specific card. But for the most part, these are pretty much trophy cards. And they're always going to be seen as such. It's a niche market, but it still is a good market to diversify in. If you're one of these guys that thinks Pokemon is everything and you're putting all your money in Pokemon, by all means, you should be diversified into promo cards as well. Now you go on to ask any thoughts on other games as well. In all honesty, I like promo cards when it's applied to Pokemon. It's hit or miss with other card games. I'm going to be very honest. That's just my opinion. And I really don't want to go into detail in this video on this because I may do another video on this topic at some point down the line where I can expand on this. I'm just saying, though, Pokemon right now is the top collectible card game in existence. As a matter of fact, if you're going to invest in any type of collectible card game, I would honestly tell you, Pokemon should be number one. Number two would probably be Magic the Gathering, of course. And there's opportunity in both those markets still. I will tell you, go easy with the modern stuff. You guys are going crazy with the mass-produced, scarce, modern Pokemon, Magic the Gathering cards. Don't get me started on the stupid Final Fantasy Magic the Gathering crossover set. I was going to do a video on that. Every time I go to record a video on that, I get too upset and I go off on some four-letter word-laced rant. So you're probably not going to get that video anytime soon. But just know, just be cautious with modern era Pokemon and Magic the Gathering products. I'm not going to tell you there's not opportunity in there, because there is. But in my opinion, honestly, a lot of the vintage Pokemon cards, a lot of the vintage Magic the Gathering cards, they're getting kind of forgotten. And a lot of people are starting to refer to them as dead money. It really isn't dead money. It just means there's not currently any interest in that market. That doesn't mean that market's going to always be dead. That means that there's probably at some point going to be some opportunity in that market. So you might as well take advantage of some of those prices while they're somewhat low or stagnant at present time. That's just my opinion. You go on to state, personally, I love the art on a lot of them, especially some of the Japanese promos, but they seem kind of niche. And you hit the nail on the head. They are niche. It's just, there is opportunity there, especially when we're talking about vintage Pokemon, of course. You also have one more question here. Also, any thoughts on Flesh and Blood in the year 2025? As a player, it still feels like it's mostly about playables, staples, and sometimes bling for meta heroes. Okay, I've said this before and I'll say it again. I do not like Flesh and Blood. I don't know how many times I can state this without sounding a little bit standoffish, but if you're going to invest, remember, this is a collectibles finance channel. If you're going to invest in any type of collectible and it's related to a collectible card game, the top two are Pokemon and Magic the Gathering. Anything else is pretty much extremely, extremely speculative. We can even make an argument when we look at the categories that govern the antiques and collectibles trade, whether we're talking speculative, established, mature, sophisticated markets, all collectible categories are still speculative. But at least Pokemon and Magic the Gathering have been in existence for several decades now, where they do have a core following. There is organic collectability there. When it comes to products like Flesh and Blood, don't get me started on MetaZoo, which I think is coming back from the dead, if I recall correctly. I saw some videos on that. Those markets are extremely inherently risky, and I get it. I know there's a lot of people out there that disagree with me because there are a lot of players out there that have gravitated towards Flesh and Blood. I'm just here to tell you, as an investable product, I don't see it having the credibility that Pokemon or Magic the Gathering, or even hell, first edition Yu-Gi-Oh! Vintage cards have, if that tells you anything. And I really don't like Yu-Gi-Oh! I know there's a lot of people out there that do like Yu-Gi-Oh! I was never a fan. I don't invest in Yu-Gi-Oh! But I do like Pokemon and Magic the Gathering. So take that for what it's worth. Okay, now, I want to warn you, this is going to be the last question for this particular segment in the 18,000 subscriber Q&A series. This is a doozy. We're going into Pokemon and the validity of investing in modern era Pokemon sets. And this person is going to want me to rehash some of these previous arguments that I've already talked about ad nauseum in regards to the current Pokemon market and the risk versus reward in this market. But we are going to go through this because it's the last question I'm taking for part 14. So bear with me here. So here we go. Sean, love the channel. I know you talked about the modern Pokemon card scene already, but was wondering if you can go into a bit more depth on it. Now, this is where I have to scratch my head. And again, I know this person probably means well. I know this person is not trolling me. I want to make that very clear. But how many videos have I done on this channel where I talked about the risks of investing and hoarding modern era Pokemon cards? That said, there is opportunity in this market, but you have to have a realistic assessment of the market overall. And you have to understand the risks versus rewards of tying up substantial amounts of capital in that market, especially over the long term. So I don't know what you mean when you say, could you go a bit more in depth on it? It's almost like you guys want to just see me do more videos on Pokemon. If that's the case, let me know in the comment section below, and I gladly will. The reason why I don't do too many videos, in my opinion, on the Pokemon market, because the main scope of this channel is collectible finance. I try to cover all the popular markets that make up the entire antiques, art, and collectible scene. And also, I don't like, how do I want to say this? Encroaching, maybe that's not the right word, but I don't like kind of like intruding on the space of a lot of these guys that do nothing but talk about the Pokemon market all day and long. And whether or not I agree with their content, whether I disagree with their content, it really doesn't matter. I just think there's so much information out there on Pokemon already that it would be redundant for me to spend like a video a week talking solely about collectible card games. Now, maybe a video a month I would like to do talking about collectible card games, but I'm not someone that's going to take a deep dive into this market, because all you got to do is watch my previous videos, and I have done a deep dive on this market, and I tell you guys the honest risks of parking money long-term in this market. So you go on to state, it seems that Pokemon booster boxes always increase in value, and if you buy into them at a price that is lower than market value, there doesn't seem to be a whole lot of risk. Okay, let me stop you right there. Look in my background right now. This is what everybody gets wrong about this channel. Do you know why this is in my background? Do you guys really want to know why this particular Pokemon product is in my background? Because this is one of the Pokemon products that really never accelerated on the secondary market. So this is something that all the Timmies, Kimmies, and Poindexters in the Pokemon community, when they talk about me on online collecting forums, and they sit there and they go, look at that guy, Reserved Investments. He's telling everybody that Pokemon's a bad investment, and look at what he put his money into. They don't get the inside joke. The reason why that's here is because that item did not accelerate very well on the secondary market. That item proves that there is a significant amount of risk in the Pokemon market. This item did not outperform the S&P 500 index fund. I'm sorry to tell you. I can look at the numbers any which way you want me to, and I can tell you right now, an S&P 500 index fund beat the hell out of this Pokemon product in my background that I'm pointing to. That's exactly why it's in the background, to show you guys that there is significant risk in this market. And guess what? Not all products appreciate the way that you guys think they will. That's why I do that, okay? So you go on to state, let me just see where I stopped here, forgive me. Do you see more modern sets from the Sword and Shield era, like Evolving Skies, Fusion Strike, Lost Origin, Chilling Reign, etc., ever decreasing in value substantially from their current prices? Anything is possible, my friend. Do you remember Alpha Investments did a video with his infamous Pokemon bathroom, where pretty much after the popularity, after the success of Pokemon Go, people started to slowly lose interest in Pokemon. And he put all those products in a bathroom in one of his houses, and he locked the door. It wasn't only really until the pandemic where prices started skyrocketing again, and demand kicked up, and pretty much people wanted those particular items. These markets are very unpredictable. There is no guarantee that the gains that you are seeing in Pokemon are going to continue to go up exponentially year after year. And this is the risk that you have to be willing to accept if you are investing in that market. Case in point, one of my favorite vintage Pokemon sets of all time is Skyridge. Do you know why I like Skyridge? Skyridge came out at a time where Pokemon was not going gangbusters on the market. As such, the company, when Nintendo took back printing of that product from Wizards of the Coast, and when they produced Skyridge, they didn't overprint that product. That's why go look at what some of those cards in PSA 10 go for. Go look at what a factory sealed booster box of Skyridge goes for on the secondary market right now. It's because the product was not over-hoarded. The reason why it wasn't over-hoarded was because demand was not there like it is today. Everyone today in the year 2025, if you are buying and investing in Pokemon products, are you aware the word investment is going to come out of your mouth? Everybody is hoarding this stuff just like they did back in the 1980s and 90s during the junk wax era of sports cards. And that's what scares me. Yes, there are differences in the market. You can argue, well, Sean, these are collectible trading cards. They're game pieces. I hate to use that term, game piece army, if you watch Rudy with Alpha Investments. But it kind of makes sense where I get it. It's a little bit different. The dynamics are a little bit different from sports cards back in the day because they were all pretty much printed the same. There was really no rarity. There was no excitability. When you opened up a pack, you knew pretty much what you were going to get out of that set. Let's be realistic. With Pokemon cards, with Magic the Gathering, it's a little bit different. But you need to understand those same dynamics are there where everybody's buying it as an investment. That is not a good sign. Does that mean I think it's going to go to zero? Does that mean I think Evolving Skies are going to go down to like $300 a box? No, something substantial would have to happen in the market for that to happen. So I'm not worried about that. But what I'm going to tell you is you have to be very careful and understand the risks. Everybody is investing in this stuff right now. That is not good for the long-term validity of these items. It's no different looking at video game collecting. People back in the 1980s, even the early 1990s, for the most part, people did not go to stores and hoard factory-sealed video games. Today, in the year 2025, if Best Buy runs a sale on a popular Nintendo Switch game and the retail price is $59.99 and they drop it to like $29.99, I guarantee you there's going to be people that are pulling it off the shelf. They're going to buy more than one. They're going to throw them in a room and they're going to keep them factory sealed, hoping that the price goes up. Speculation is what runs rampant in these markets, and that also is what brings an added layer of risk. Now, I want to read the rest of your question here, so let's continue. I think, meaning you, I think they'll just continue to increase, same as all the other generations before them. And again, it's possible. Who knows how long this market can go on for at these price levels? I will tell you, though, no market can go up exponentially over the long term. That's why we're having this conversation. You go on the state. I asked this question and specifically about Sword and Shield era booster boxes because these are the booster boxes that make up the majority of my collection. Okay, now I'm going to tell you this. In all honesty, you go on the state that it looks like you have spent a total of $10,000 in Canadian funds on this collection, on this investment portfolio of Pokemon cards, and it's now worth $23,000. What I would tell you, I don't know what your net worth is. I don't know what your financial circumstances are. But what I would tell you is, what if you sold half the collection, took those profits, and put it in a well-diversified financial portfolio? That way now you have 50% of your holdings in Pokemon, and you have another 50% in a well-rounded, diversified financial portfolio. Start with index funds. What if you did that? That would make more sense to me. I don't understand why you guys, you'll spend like $10,000 on Pokemon cards. It goes to $20,000, $30,000. Then you argue with me, well, Sean, I'm going to, diamond hands, I'm going to hold. But you're not giving me the other information that I need to make a calculated guess or estimate to help you. Meaning I need to know, what's your overall net worth? Do you have all your money in Pokemon? That's completely ridiculous to me. And that's what I am telling you. You have to be careful. You have to look at these markets as they actually are, not for what you want them to be. And this is why I tell you guys, if you go to the top tier of any collecting category, there are dudes out there that pay millions of dollars for some of this stuff, meaning for one item. They are very good, though, in most cases, of being able to separate logic from emotional attachment. And I'm going to be honest with you guys. I've interacted with a lot of members of the Pokemon community, and a lot of you guys, you are really taking a dangerous approach here. You're attempting to merge investment logic with emotional attachment. You're not separating those two things. And that's what's going to get you guys into trouble. Now, I've said enough on this. I've done a lot of videos on this particular talking point. I'm going to end part 14 of the 18,000 subscriber Q&A series here. I hope you're getting something out of this video. If not, please let me know in the comment section below. We will resume the 18,000 subscriber Q&A series soon. I'm hoping the next video is going to put the final nail in the coffin on all the questions that I have left. Thank you for watching and have a great night.